Okay, we're going to go through the value of having a second mortgage and why, although it's not commonly used, this could be a really big game changer for you in a high interest rate environment. So, first of all, what is a second mortgage? Second mortgage means your first mortgage, whoever your lender is, stays completely intact. Nothing changes, not the payment, not the interest rate, not the amount. We put a second mortgage behind things. Now, how you qualify for this, and this is a big thing, there's no credit requirements. You could have very poor credit, you could have been bankrupt, anything like that, and you are permitted to get these loans. There's no minimum credit score. There's no income requirement. Has to make sense. We're not going to give you a payment that's $1,000 a month when you're making $900, something like that. But like if you have a situation where you write off a lot of your income because of you're being self-employed, or maybe you get a lot of tips from whatever your income is, or maybe you're new to your job, or tons of reasons. None of those are required. The only thing that's required is an equity position, usually what's called 75% loan to value. So it means if you own $1 million house, you can do a mortgage up to $750,000, which includes your first mortgage. So if your first mortgage was $600,000, we get you a mortgage of $150,000 as a second mortgage. Okay, so that's how it works. So virtually everybody qualifies for this. This is why it can be a helpful thing. So struggle these days, let's say somebody has a mortgage here of $500,000 they got in the height of the pandemic. Lowest possible situation, because all variables went up, is maybe they have a fixed rate of 1.7, $2,066 per month. They're very hesitant to break that. We roll a bunch of this money in, and this isn't even all of it, but just even rolling $580,000 in, they're already jumping up almost $1,700 the interest rate. So people are not wanting to do a traditional refinance because that looks pretty silly in most circumstances for folks. So let's say this particular borrower has a 2% car loan, 50 grand. We see people owing a lot more than 50 grand, 876 a month. It's a really great interest rate on a car loan. So they're only actually paying $42 a month in interest. They also have a little bit of credit card debt, 30 grand. We are including that as 20%, even though most credit cards are actually higher than 20%. And, let's say they have a credit line, which is 14% right now. And so, which some of them are a little bit higher than that. So 50 grand in unsecured debt. This totals, and we're not including the car payment here, $732.42 just in interest alone, not any principal or anything like that. Not including the car loan here in this situation. If we were to consolidate this into a redo second mortgage, which means we don't touch the first mortgage, to a second mortgage, these are 12%. They have additional fees. This is why it looks like 56,000 to consolidate 50 grand. They're moving to an interest of only $560 a month. So $560 when you're paying $730, instantly you are saving money on your interest. And this is what a lot of people don't get. They're all scared about a 12% interest rate, not realizing they're paying 20 and 30% of these credit cards. So this makes a ton of sense. Even in the 6 grand for fees and legal fees, you're still saving money and interest every month. Now, that also becomes my minimum payment on here is $560. So the other way of looking at it is I've increasingly done my cash flow. Now, if I do increase this and I go $106,000, add the car loan. So I have a second mortgage, $106,000. All my credit card, credit line, car payment, all rolled into one. I have now turned my payment into $1,060 every month, which, that can be a bit of a game changer too, because currently this borrower has $1,606 that they're putting on a monthly basis, so they can reduce their payment to $1,060. So I don't think from the interest perspective, putting a car loan at 2% makes sense. But from a cash flow perspective, you're saying, yeah, we need to have that $500 a month back in your budget. This is a way to do that. So remember, not much for income qualifying, not much for credit qualifying. If this can help you, please reach out. We can get this tied up very quickly for you. And if you know a friend, this could help them, send them this video and we can help them all with it. Thanks so much. Talk to you soon.